Change the style, make it solid. Let's make the color something really recognizable here, like a pale pink or whatever. Don't forget to change the input to a 4. That's important. And now you see a second signal line or jump line, but this is your trailing line. And this is not attached to the calculator. This is so you have a visual cue. But you could trail a faster line, and that can give you a lot of interesting possibilities. So you have that built into the calculator. It's pretty cool. It's a great feature. Just trailing the jump line, R9, is very powerful and universally works on most markets. But if you're trading like an hourly chart or a 4-hour chart or a daily chart or just a time-based chart, you get these big spike moves, you might not want to wait for the 9 to catch up. You might want a faster trailer to capture spike moves and have the calculator track it. And the calculator will not track everything, of course. It only tracks the primary trade. A primary trade is when you're flat, and then the next trade that triggers in, that's a primary trade. Every trade that follows in the same direction would be considered an add-on trade, even if you're not adding on, even if you're, we've talked about this. You might trade one of those additional trades too, but the calculator will only track the primary trade. Once it's flat, the first trade that triggers in, that's the primary trade. But you have a lot of flexibility. Let's go ahead and remove this now. Let's set it back to 9. Just continuing with this group of indicators here, your trailing stop, trailing ticks is how far on the other side of whatever it is you're trailing, the jump line in this case, are you going to trail by. 2 ticks is standard. With Forex, it might be 2 pips. So you put in 20, right? So that means as each bar moves, the stop moves, and it's always above 2 ticks above that jump line. Okay? Plus or minus key level adjustments. So we're going to get into the key level adjustment section in a moment. I'll give you a full training on key level adjustments. But you might see, hey, wait a minute, why is the trailer 3 ticks above? It's supposed to be trailing by 2, and that's because it might be adjusting around the key level. So it's smart enough to know to make those key level adjustments for you if you're using key level adjustments. All right. The next group of settings is what I just showed you on the break even. Okay. This says we're going to start trailing at the second target, but it also has to have gone at least 10 ticks. And you might think, gee, that's a pretty small trade. And it's true. I mean, most of the time, target 2 is going to be way more than 10 ticks. But you could get really small setups, especially with time-based charts. And so you don't want to start trailing prematurely. Okay? But you could always make that a 0 or a 100, or you can make it 9999999, and then it's just a moot point. And then you might want to start trailing sooner. So maybe you don't want to move your stop to break even at 20 ticks. Maybe you just want to let that be what it is. But you do want to start trailing really quickly. You don't want to wait for it to get to your second target. Maybe you want to start trailing as soon as it's gone 10 ticks. And that will help cut your risk. Oftentimes the jump line will not have caught up to the price yet, but it will be a smaller risk than when you first started. Let's see if we can find a good example. Let's look at this big trade again here, all right? Because you can see that it doesn't start trailing until the second target is reached, and now it's trailing, right? But it's a really big trade, and so maybe you want to cut risk. Notice that the jump line's way up here, your stop's way down here, you see? So this is a really handy feature, because after it's gone 10 ticks, you might say, gosh, I've got $100 per contract. Do I really want it to come all the way back down? And not only, do I lose 39 ticks, but I'm really going to lose 49 ticks because it's already gone 10 in my favor. I think I've earned the right to cut my risk, right? So if you set big trade to trail to 10 ticks, watch what happens to the trailer. Look how it went from here all the way up to here. That's because this very first bar has already gone 10 ticks. You see? and you've been able to now cut your risk from here to here. Maybe 10 ticks is too aggressive. I don't know. But this is a really nice way to cut your risk really fast and begin trailing much sooner than getting to that big second target. Of course, you will get bumped out of trades prematurely sometimes. Okay, if you look at this short trade here, it's coming down and it's cutting risk right away after going 10 ticks. It's cutting risk, cutting risk, cutting risk, and then it stops out here. Okay, of course, coincidentally, it would have hit the second target and the stop would have moved down anyway. That's just a coincidence, unless you had the minimum target set to like 50 or whatever. Right? There's so many things you can do, but the risk gets cut much sooner, right? It doesn't go to break even yet, but it does cut the risk from way up here down to here once it's gone 10 ticks. And so you could really improve a lot of your risk rewards. Now, what if it's something you want to turn on and off while you're trading? When you see a real big target like this, then you want to use the feature. When you see a smaller trade, maybe you don't want to use that feature. This all is something you can determine when you do your own back testing. We built in a lot of flexibility and versatility into the tools. So a really easy thing you can do is either you could put on a second calculator and you could label it, and one of them you have set up so that on the bigger trades you can use that calculator. You just quickly turn one off, turn one on. You could use that with your status button when you go to format indicators. The other thing you could do is just have another chart. Copy and paste the same chart, and on your one chart you have your default settings, everything you normally trade, but when you get a really big target or trade set up like this and you want to get that money management more aggressive, obviously you could do it with your eyes. You don't need the calculator to track it. But if you want the calculator to track it, you just toggle over to that second chart, and that second chart you could have a calculator that's set up just for big trades. You can type in your comments here that remind you, and you could even change the color of your candlesticks so that you can quickly remember one of them is default, and maybe one that's blue and red or different colors is your custom one that's for big targets, big trades. And that calculator is set up to cut risk quickly. So it's the clever use of different charts, different colors, different calculator settings that you could really customize your workspace. And you have to allow yourself the time to just learn your market, learn how the strategy works, learn how the tools work. You don't have to be perfect and get it right the first time. That's why we go through the Steps to Success guide, go through our repetition, and learn. And as we get better and better, you realize, wow, these tools are just amazing, what you can do with them. But you have to learn how to use it. So learn by doing, set up a dummy chart, change settings, watch what it does, and learn. Okay? So the big trade, the trail set to 10 aggressively, could start cutting risk and locking in. And what if you wanted to set that to a faster jump line? I mean, imagine all the interesting things you can do. You can scalp. You could start scalping. Maybe don't even use targets at all, right? The targets become a moot point. You instead just use a fast jump line and capture spike moves. Boom, in and out. You can do that with this. You might learn that on these kind of setups, 98% of the time the price goes 10 ticks. So move your stop. Move your stop up, grab a 10 tick profit, move your stop, trail the other half. You have so much flexibility. There's so much you can do. All right? Let's just continue on. Let's say that we built in a lot of flexibility. All right? So now you understand. Let's go ahead and set that back to 99999. Let me just put that back to normal. Okay? This is where the trade tracking becomes a very powerful tool. Let's say that you're only interested in the counterpunch trades with the most extreme levels on your HTC indicator. Okay? When it gets down below a -1 or up above a +1 on this chart, you can draw a horizontal line across your HTC indicator. You could put a line right across on both. You could even set it to alert you. Okay, it's come down, it's past that line at 1 or -1. You get an alert. You can set that up on the horizontal line. Now, the only thing you're interested in is looking for counterpunch trades. You can turn off your failed swing right here. Use counterpunch, set to true, use failed swings, use second chance. All right, so if you only want to see counterpunch trades, white trades, you can turn these two off. Okay, it's pretty cool. It's really flexible. We really were thinking about all the different types of ways to use a strategy. Maybe you just like the failed level, right? The extra confirmation where you get a failed swing level. You can turn off the counterpunch trades. Maybe you think those second chance trades are so powerful, they work better than the others. You can turn these two off. You have a lot of flexibility of turning on and off stuff. Okay? You might not want to show the add-ons. Maybe you only want to see the trades that the calculator can track and nothing else. Show add-ons, set it to false. A lot of trades disappear. Now the only trades you see are the trades that the calculator is tracking. That could save you a lot of confusion. It can clean up your chart. Go ahead and backtest those. I think you're going to be very happy with what you see. So much you can do. There's so much. So let's see. We've got show add-on trades. What if you want to be like me and you don't even want to use trade tracking? Go back to the beginning of the training. You just want to see the setups and you will manually track everything on your own. You've got the jump line, you see where the dots are, you see where the target is. Maybe you want to start trailing at target 1 and not at target 2. There's a whole bunch of reasons why you might not want to use trade tracking. Plus it means less markings on the chart. So you might want to clean up. See all the markings on the chart? All the tracking and this and that. Maybe you just want to see the setup. So turn trade tracking off. And now you just got the straight setups. You still could turn the add-on trades on or off, right? The darker color trades are not being tracked or wouldn't have been tracked if you turned it back on again, right? So you could turn off those extra trades if you want. You can turn trade track is set to false, but you could also turn off the add-ons for fewer setups. Lots and lots of flexibility. Let's see, there's some other stuff you can do. Let's get all these set to true again. All right, here's an interesting one. Let's say, now I showed you in a past video how you could use the SMA, the simple moving average, to filter out stop and reversals. And there's some other stop and reversal tricks. I'm going to show you in another video some of the things you can do. You always want to have extra confirmation when it comes to a stop and reverse. All right, you just don't want to stop and reverse. You want to make sure you're stopping and reversing, and the odds are you're cutting risk on a losing trade and getting back on the right side of the market going in the other direction. That's why we stop and reverse. But you don't want to get caught up in a whipsaw with a lot of false signals and just lose, lose, lose. You stop and reverse, you stop and reverse. The original trade would have won if you just would have stuck with it, right? So we have ways of doing it. We could look for extra confirmation with the HTC, you know, the signal lines. We can use extra confirmation by just adding a few more ticks to the entry, making it push through a little further, go through a chart level or a key level, support and resistance level. We can make sure that we're following the direction of the 20 SMA. If it's a strong trend, those moving averages will show us. And we don't want to stop into the 50 EMA, especially when you're in a chop zone, right? You stay with your original trade. You don't trade into the 50 EMA in the chop zone. So a lot of tools we have for staying with the right trade. But you might not want to use the 20 SMA. You might be trading a market like crude oil. It moves faster than that SMA, and you find that it works so well without the SMA. If it ain't broke, don't fix it. I don't need the SMA. In fact, I've found that if I just stay with the original trade and don't stop out, some of them I'll wish I stopped out and went the other way, but most of the time it just works. I just should stay with the original trade. I don't want to even see a stop and reversal at all. Well, you can turn them off. Use stop reversals. You could set it to false. And stuff disappears. Stuff stops showing up. Let's see if we can find one. Let's see. I'm going to set it to true again. Let's look at a stop and reverse. Use stop reversal. All right. Yeah, you can see, obviously, this is during a holiday, and you got long bars. You're not even going to be trading here, but the calculator doesn't know that. And so here's a short, and it stays and stays and stays, and so the calculator isn't tracking any of these other trades because it's tracking this one. Finally, it gets a long trade here, and it's going to stop and reverse. And the tracking, you can see it. Here's all the stops. All of a sudden, it hits the entry going the other way, so now it starts tracking the long trade. If you don't want to track stop and reversals, set it to false. And now look, it didn't even pick up this trade because it's still tracking a trade. So it's interesting because it's hard to even know. You have to go all the way back to this trade here. And it's got this huge target. It's in the pre-market all the way back on the 13th, and it triggers in. But even these big trades, you just never know what's going to happen, right? So it's not going to stop and reverse to short. It's not going to track any more long trades because it's in this big trade here. And so it's just ignoring everything else. You can see the stop going all the way across until finally it ultimately comes up and hits a target. And when it hits a target, now the stop moves up and locks in one tick here, you see? It turns the trade into a swing trade. If I compress this down, we can follow it easier. Okay, so it got in here. It keeps you in the trade the whole way. Avoids everything. This is a huge trade, obviously. It's, almost 7 points you're risking. But you got all these big targets. Okay, it keeps you in the trade, keeps you in the trade. It's not stopping and reversing. It's not taking the add-ons. It's just staying in the original trade. Hits the first target, and then the stop moves up to lock in your one tick. And that holds you in for like a day and a third. And then finally it comes down and stops out. You see? So is there a place to use this feature? Maybe. Depends on what market and time frame you're trading. But it's there if you want it. Okay, so the next group of settings, we'll put that back to true. The setup dots. Those are your magic dots that show you the exhaustion points. Maybe you don't want to see them. Maybe it's like, that's just too much stuff on your chart. You don't need them because the calculator is still going to know where to put the setups. You could easily just set it to false, and now those go away. Or maybe you want to see fewer of them. What if you want to see them, but you don't need to see all three dots? Maybe you only want to see one or two. That's where you just go to the color tab and change your color. First of all, let's put them back on. All right, so let's look at these. Remember, it counts backwards because you've got to wait for the 3 bars to finish before you get your dots. So the first one is going to be your third one, for example. So let's say we want to turn off dot number 1. We only want dot number 2 and dot number 3. We don't need to have all 3 dots. You can go to the third one over and just change the color from yellow to black, like so. And you see how it hides that dot? There's one less dot you have to look at. Okay, maybe you don't even want to see, maybe you just want to see the middle dot and nothing else. So you can turn off the first dot and set that to black. Now you just got 1 dot. Okay, so you don't have this one, you don't have that one. So you can clean up your chart, right? You can use the dots to warn you a setup's coming, but you don't have to necessarily have all 3 dots. I personally like all 3 dots because it really, really quickly shows me support and resistance levels and exhaustion levels that are so important to this strategy and trading in general. So I want them. But each to his own. You can change the color, and you can change the style. You can make them bigger, you can make them smaller. You can change how they look. You can make them all crosses if you want. A lot you can do. And remember, just open up a dummy chart and play with the settings and see what you like and get it to where you like it. Okay, so let's continue on. So these are a lot of your on-off features here. You might not want to show certain things. Here's your show risk to reward. You might want to turn that off. You could set it to false, and all of a sudden you won't show your risk to reward. Okay, I don't know why you wouldn't want to see it. Your signal line length, that's telling the system to work off of the 9, the jump line. Can you make an argument to look at some other ideas? Yeah, you certainly can. I mean, remember what I showed you, that this HTC is looking at the trend 5 times higher, and then we went and looked at that and we divided all these by 5. Well, what if you divided all these by 5, and instead of trading off of a 9 jump line, you trade off a 4, a faster jump line for a scalp strategy? That could be pretty interesting. There's a lot of things you can do. Okay, as you learn this more and more, you're going to see that these tools are really designed to empower you to trade all different kinds of markets in all different kinds of ways. Just become a student first, learn the strategy as is before you start experimenting. So this is just set to 9 so that it works with the standard jump line. And these are, of course, your settings for the HTC. So when I showed you that example, we were changing the actual HTC itself. If you're going to do that, you have to make sure you change it inside the calculator as well, because this has its own HTC, high trend chop, built into it. And then your fast line and your slow line, that's your cyan line and your yellow line down here. A lot you can do with that, right? And then you have color settings. Counterpunch trades are white. The add-on counterpunch is a light gray. And maybe you're like, I can't really see light gray. Maybe you want to make it dark gray or a different color. The failed swing levels are bright green when they're being tracked. When it's not being tracked or an add-on, then it's dark green. You have the light lilac color purple and the deeper purple for an add-on. So you can change all that if you want. I like having the same colors all the time so I always know what it is. Alright, now we get to the key level adjustments. This is set to true. I don't know if yours is set to true or false on default. It really depends on the market you're trading. With the Russell, the E-minis, a lot of the futures markets, I like to turn it on. There's a minor key level and a major key level. So when you set it to true, it turns all the key levels on. Alright? The minor key level for many of the futures we trade are multiples of 5. We're talking about the price, when the price is at a multiple of 5, and that's in regards to ticks. If it's set to 5, then every time it gets to, like for example, 1221.5, 1222, 1222.5, 1223. That's your minor key level, the multiples of 5. If you just want it to be multiples of 10, which for the Russell that would just be a round number, 1221, 1222, 1223. You don't care if it's at 0.5. You would set it to a 10 like so. Okay, we'll leave it at 5. The first two settings deal with your entry. And if you set it to 1, what that says is that if you get to within 1 tick of your minor key level, which is multiples of 5, then you're going to adjust it 1 tick beyond. So if you're trading long and you get to 1221.4, you're within 1 tick of the multiple of 5, it's going to adjust it to 1221.6, 1 tick beyond your key level, your minor key level. If you don't want to adjust it until you're actually hitting it, like let's say at 121.4, you don't care, you just want to stay there. But if it hits 121.5, then you want to adjust it 1 tick. Then that means you put a 0 in the zone. That means it has to hit the key level right on the nail, and then it will adjust it 1 tick. Okay? So we want to adjust it when it gets to within 1 tick. And then same thing with stops, right? That's going to push the stop further away. If the stop is at 121 on a long trade, 121.6, you want to adjust it below to 121.4. Okay? So the adjustment on the target pushes the target further away around the key level. The adjustments on the stop will push it further away beyond the key level. If you want to move it closer in, you could start using negative numbers in here. We don't really do that with key level adjustments, okay? Now targets will move the targets closer. So maybe you have a target that's at 121.1 and you don't want to have to make the price fight through the 121 level. You want to have that target move to 120.9. Then if you get to within 1 tick of a key level, move the targets 1 tick beyond it, which will pull it closer to you. I usually don't use those, but you may want to. The next group works exactly the same, except this is a major key level. So this is set to 50. So if it gets to a big 50 level, these are when you get, like, for example, 1250, 1300, 1350, 1400. Those numbers. If you get to within 2 ticks, adjust it 1 tick beyond. That's how I got my entry and my stop. Once again, I'm not doing the targeting. Now, this is very powerful. You can turn it on or off. Some traders will honor these key levels, but they want to do it manually. They don't want the calculator moving the stops or the entries for them. So then you just merely turn it to false, and you can do it manually. You can keep the trade exactly where it is, make the adjustments on your own. But if you want the dots and the actual entries to show up so you don't have to think about it, there you go. Set it to true. For Forex, this is really interesting. Forex has that extra digit, right? In fact, let me open up a Forex chart and show you something. We'll use MT4, could be TradeStation or Ninja, doesn't matter. Down. Okay, so notice on the key levels here that I've got my key levels set to true, and I've got a minor and a major level, but look at how I got zeros on everything. What that means is that I want to make my key level adjustments myself. And one of the reasons I like to do that, and I don't want the calculator to do it, is because of spread. Okay, because spread messes things up. And I rather just put my order in and think it through. I don't need the calculator to move stuff for me. You could start setting these up so that it'll do it for you. You certainly can do that. But I still have it set to true. So you might say, well, if you're going to do it manually, why don't you just set it to false? And the reason why is because of these last 2 settings. This one's very important. Round Forex to pip. What that's going to do is it's going to round the extra digit to the full pip. So you might not want to deal with fractional pips, right? You don't want to have to go with 3/10 of a pip, that extra digit, whatever. So if you set it to true, it's going to put all the major trade decisions, entries, targets, and stops on a round full pip, not on a fractional pip, that extra 5th digit or 3rd digit with yen pairs. But there's a zone. This gives you even more flexibility. The FX zone is when does the rounding begin? Because the way I look at it is, let's just say I'm on a price point that the low is 13562. I might think, well, that's close enough to just 1356. So let's just round it to 1356. But what if it's at 13563 or 13566? Then I want to round it to 1357. So the way it's set up here is if it's to 1 or 2 ticks, it's going to round it to the nearest. If it's more than 2 ticks, it's going to round it to the next level further away. Further away for stops and entries, closer for targets. Okay? And I realize that is a very subtle nuance, and you might even be confused by what I'm telling you. But just start changing this number and look at what it does, and you'll quickly learn that this is just more control over the rounding. So if it's 1 or 2 ticks away, it rounds to the closest pip. But if it's 3 or more ticks away, it rounds the stops and entries to the pip that's further out. It rounds the targets to the pip that's closer in. Very powerful. It doesn't seem like much, but it could make a big difference. So I've just found over many years that I like the 7 setting. Okay, you can set it to however you want, but it's very nuanced. But it's the only thing I'm using with the key levels here on this Forex chart. Again, there's a lot of flexibility and power built in to this calculator. And with that, I believe I have covered everything in the calculator. Clearly, there are things that we're going to do with our trading that the calculator can't do, and that's okay. You have the ability to turn things on and off. You have the ability to be very flexible, and you could also specialize in a specific setup and style of trading if you learn how to use the calculator correctly.